3, 2, 1. Good evening, everybody, and welcome to the call. My name is Armando Torres. I am the Chief Executive Officer of the Powerhouse Financial Independence Network. We call it Powerhouse Financial. Tonight's my plum pleasure to welcome you to the call and introduce to you our guest speaker tonight, who will be presenting the business. The gentleman who's going to be speaking tonight is going to do a phenomenal job. I ask you to please put everything on silent, lock the door, take out pen and paper, and take copious notes. Gentleman is going to be speaking tonight. He is one of our regional vice presidents in the great state of Florida, growing a phenomenal team, doing some incredible things with his organization. And this evening, we have Fabian Guerra, who's also in Florida, who's building a national organization. And just to give you an example of what true tenacity is, Mr. Fabian was in the hospital this weekend, and he has continued to be able to build his organization and do some phenomenal things with what he's doing. Really building on his B quadrant income, and Andres is going to talk to you guys about that tonight. So without further ado, guys, I want you to sit back, kick back, relax. Again, Andres comes from the business world. He has multiple licenses, was a pharmaceutical rep, understands building networks and understanding how to talk to professionals. He's also been able to do some phenomenal things in this sector of construction management and stuff like that. Really a true asset to the team, and really an exciting partner to be partnered up with. So without further ado, guys, from the great state of Florida, Mr. Andres Verney. Can you hear me, sir?
All right. Yes, sir. Thanks, Coach. Thank you, guys. Thank everybody for joining us. Appreciate you spending your quality time with us. I promise to do my best to make sure that this is absolutely one of the best 15 to 20 minutes that you've spent with just about anybody. But I want to introduce Powerhouse Financial Independence Network, created and started by Armando Torres here in the great state of Florida. And what I want to share with you guys tonight is our mission statement, where our goal is to help middle American families become properly protected, debt-free, and financially independent. More importantly, on top of that, we also want to help our agents become financially free as well. So the more people you help out there, we expect that you'll also be helped in the interim as well. All right, financial challenges. Some of us are going through right now. You don't have to admit or raise your hand, but I just want to share with you the facts. 78% of people out there are working full-time jobs, living paycheck to paycheck. More than half of Americans have less money in savings accounts, less than $1,000 in their savings accounts. So if God forbid an emergency occurs, it just becomes a huge burden for them. U.S. households in general carry debt of an average of $15,000. I think after COVID, it probably went up just because people were out of work and at home and had to probably rely on credit cards and loans to survive, maybe take money out of 401k plans. Nearly half of U.S. households don't have enough life insurance. So mom, dad, and 2+ kids probably don't have enough insurance, life insurance, if God forbid one of those two main breadwinners pass away. Puts the family in a very tough bind. Social Security is designed to replace up to 40% of your income. So when you hit age 62 plus, can you live on 40% of what you currently make? That's a question only you can answer. And that's some of the challenges that we're seeing. And many of you are probably realizing and seeing what we call the gray-haired back to work phenomenon, where you've got mom, grandma, and grandpa on the other side of a counter asking if you want paper or plastic. And that's one of the things we are really aimed at trying to reduce as much as possible. All right, here we go. Now let's get your financial house in order. Let's give you a little scenario, kind of an overview, big picture. Early on, when you're young, maybe newly married or 20s or 30s, you don't have a lot of money, trying to figure things out, probably have one kid and a dog and a few more on the way, and you probably need a lot of coverage. And God forbid if any of the two breadwinners should die too early. Later in life, we hope that you have a lot of money, especially for retirement, and that you may not need coverage. Today, a loss of an income in the household would be devastating. Our goal is to teach and educate you guys that eliminating as much bad debt as possible would be key. And the earlier you start that, the better. That way you'll have more money for future retirement type things. Having an emergency fund, the average, what's recommended is 3 to 6 months. I'm sure after COVID, many of you wish you had 6 to 12 months of emergency funds in the bank account just to help cover basic bills, light bill, water bill, food, gas, electricity, things like that. Start saving for retirement as early as possible. We have vehicles that you can actually start from day one. Baby's born, the next day you can actually start their future savings / retirement account. Of course, when you do reach retirement, many people don't think about or talk about the fact that if you decide to start collecting Social Security at age 62, you may live on average 20 to 30 years from that day. Do you have the income stocked away somewhere that's going to provide you for 20 to 30 years of income to pay for your expenses, or at least to live? Hopefully by then you'll have low or preferably no debt. Your house should hopefully be paid off, or have multiple houses by then. The key, once again, we're trying to focus on is help avoiding you guys end up at Walmart at 70 years old. And if you could leave a legacy for your kids and your grandkids, that would be an amazing thing. They'll probably remember your name 3, 4, 5 generations down the road, where most of you probably can't even remember who your great-great-great-grandfather is right now. It's probably because they didn't leave you any money. So big problem when you're young is you die too soon. Major problem when you get to retirement age is you live too long, you outlive your money. Question to keep in mind here is, when was the last time you personally had a financial checkup? And if the answer is more than 12 months ago, you definitely need to get back with the person who invited you to help be one of the individuals we can help get your financial house in order. All right, listen, Robert Kiyosaki wrote a book, The Cash Flow Quadrant. It's one of the best books out there in terms of giving you an understanding of how corporate America and business works here in the United States, as well as across the world. There's mainly 4 quadrants. I'll try to summarize the book in one slide here. The E quadrant is the side where most of us start off with. You have a job. The problem with being in the E quadrant is you work your tail off. There's zero security these days. It's not like back in the days when my dad or my grandfather lived, where you work for 35, 40 years and the company would pay a pension and you'd be set for life. Nowadays, unless you're in the military or a police officer or one very few government entities will give you that security, and you really don't have much time. The S quadrant is the self-employed quadrant, which some of you may have I guess, graduated to or moved into. In this case, you own a job, so you're the boss. You have dentists, doctors, lawyers. We have agents and salespeople in this category. Self-employed people work harder actually than in their day job. They have zero security for the most part, and it's a lot more stressful. That's the left side of the quadrant. On the right side of the quadrant, which is one of the things we're trying to help people identify and get you over to, is a business side, the B quadrant. This is where you own a system. The difference between an S and the B quadrant is, in an S quadrant, if you stop going to work, your income stops being deposited into your account. The B quadrant is the opposite. The less you go to work, the more your bank account grows. So that's more of the B quadrant. You own a system and you build a team. It's kind of like a McDonald's. When you have a problem with your Big Mac or your hamburger, when you go to the counter, who do you usually ask for? Most people say the manager. Well, why don't you ask for the business owner? Because the business owner is probably not even in that country. That person's not even nowhere close to the site or that building. So it's a lot more security, a lot more stable, and you should have definitely some spare time. The last quadrant, which is what we all hope to get to, is the I quadrant, which is the investor quadrant. In this particular quadrant, your money works for you. So the B quadrant, you have people working for you, but the I quadrant, your money works for you. In that quadrant, most of them are zero debt. They have plenty of assets. And when you say zero debt, most of them have zero bad debt. So some of them may have some debt, but it's in types of assets that actually produce income. So it could be real estate, could be some other type of businesses, and they have a lot of financial freedom. So on the left side, just to summarize, you have the active income side, and on the right side is the passive income side. And if you had a choice, which of those two would you like to be on? The opportunity here that we present is we provide financial services with a multitude of products. We have health insurance, we have mortgage protection, life insurance, as well as with some disability insurance built in. We have a tax-free retirement / savings account product. It's one of the best kept secrets out there in the market. Only the rich know much about that, and we're trying to bring that to middle America because they need it more than anybody. And annuities. So some of you may have some 401ks, some thrift savings plans, some IRAs from a previous employer. I think I read an article just a few weeks ago that there's over $1 trillion of lost 401k money because people move and then move and then move from job to job to job, and they forget that they started an account maybe when they're 17 or 18, probably not even knew that they were contributing to a 401k, and then 2 or 3 jobs later, they forget that they have money back there. So if you, I would highly recommend for you to research with your previous employers and make sure that if you did have any 401k or retirement account set up for you at your job, that you look into it and see where that balance is, because we definitely can do something with that for you. Get it in a safer vehicle that can continue to grow as well. So that's what we can do for families. These are some of the partners or companies that we partner with. We have access right now. We probably have about 30 to 40 carriers that we have contracting with. We have access to over 400. But once again, these are some of the big dogs that we actually represent and we have direct relationships with. Compensation, and let's show you the money. Potential income for personal production. That's you doing the job yourself. This is called what we call in-house on your personal pen. You actually writing up the application, submitting it, and you getting paid. On a part-time basis, it ranges between $1,000 to $5,000 per month. It's probably anywhere from 10 to 20 hours a week, and depending on how hard you want to work, those are some of the on the low end scale of potential income. Full-time, you should be making $5,000 to $10,000, and that's very conservative, per month. Doing this particular opportunity with helping families with, like I said, the multitude of products and services that we offer. Now, for those of you who are really motivated or wanting to get to the B quadrant or the I quadrant, as we showed with the cash flow quadrant, which is creating an agency, creating a business, having people work for you instead of you working for your money, that income is unlimited. That income, you decide how big that check or how much that account can grow based on your efforts. And we have commission potentials of up to 140%. So we go beyond 100% in terms of commission payments, depending on products and depending on the growth of your agency and how big you want to get. So that's where the unlimited potential. Agency development. We're going to use a real estate model just so that we can give the big picture on how this works. A lot of people, when they first hear about it, it's like, oh, is that a pyramid scheme? No, it's not. Real estate is not a pyramid scheme. Insurance agencies are not, if you ask Allstate, State Farm, Prudential, they all do something very similar to this. And we're offering this to all of you to be able to do this without having to spend hundreds of thousands of dollars within our agency. So for example, in a real estate model, you have a broker. That's the guy who probably here in Florida, you have to be licensed for a few years and then you can open up your own shop. And they have agents underneath them. Now the agents in this case, kind of like the employee quadrant or the self-employed, in most cases they'll be self-employed. They have limited income potential, once again, no security, and they literally have no time. In this particular case, we're going to just use a house of $100,000, which I don't know if I can find even a shack for that amount here in Florida, but just to keep the numbers simple, $100,000 house at a 6% broker fee, it's about a $6,000 fee that you would get as a commission. And we love overrides. That's what we call mailbox money. So overrides for a broker, obviously, if he has one agent, he's going to get 50% to the agent, 50% to the broker. So they split $3,000 each. The difference is the broker's in his office or at home. The agent's running around with the actual clients. They're doing all the work. Broker still gets paid. Now, the broker, of course, is not going to live off of just one agent. They're going to multiply and produce as many agents as possible, so that they can make that commission check bigger and bigger and try to provide some security. So on the broker side, the more agents you have, the more people working for you, the unlimited income potential is where it comes in, because as many people as you want to train and hire will just increase your income. More security, because as you know, the more you spread out, you don't put all your eggs in one basket. So the more diversification you have, in this case, the more agents you have, the more security you have, because if you have, in this case, 5, but and 2 of them are at least working, the other 3 aren't, at least you got money coming in, and you should have a whole lot more freedom of time. In this particular case, just with 5 agents, this broker on a 6% broker fee, which is 50% override, would make $15,000 every month for as long as these agents keep producing, those types of numbers. How would you like to have an override account of anywhere between $15,000+ a month coming in, whether you get it or bet or not? That's what we offer in the financial services arena. So hopefully you guys have that. Opportunity number one, mortgage protection is one of the products services that we do offer. How would you like to make an extra $500 to $1,200 per hour? In this case, oops, got some people coming in. In this case, we have new homeowners. People who buy homes will get anywhere between 5 to 25 letters in the mail offering them to buy mortgage protection life insurance. So if anything happens to the borrower or the co-borrower, God forbid they die too early, there's some protection to pay off that mortgage so that the family isn't kicked out within 6 to 9 months of that happening. So that's one of the services that we do offer. Before COVID, there was only about 14% of these homeowners who got these letters would actually buy a policy. After COVID, though, what percentage do you think buy these types of policies if they're new homeowners that they just purchased a house? And I want to ask because we'll be here all night, but believe it or not, over 83% of homeowners, people who bought a house during or after COVID, are now purchasing these policies because they realize, hey, for pennies on the dollar, you can protect not only your mortgage, but you can actually protect your family from being homeless by buying one of our policies. And that's a huge relief for many families. Now, how many of those checks have you cashed? How many of those checks would you like to cash? And I said, there's a lot of here, at least here in Florida. The real estate market is going through the roof. It's going crazy. And that's just one opportunity of many. Opportunity number two, which is the one is about to turn on here in the next 30 days, is creating a monthly residual income. So that's money coming in, whether you go out or get out of the house or not, get out of bed or not. Now, health insurance actually provides what's known as a per member per month payment of an average of $25 a month for as long as a person has a policy. And we have people that have helped families 10 years ago with their health insurance policies, and they still keep getting this residual per member per month payment. Now, a family of four, so you got mom, dad, 2 kids, represents 25 times 4, $100 per month. And that's we were just using these numbers as an example. So how many families would you need to help to pay for your monthly expenses? And now, when we usually ask this question, we say, well, how much do you need per month to live? And most people say, I need $9,000, $10,000 a month. Okay, are you bringing that in right now? Chances are no. Okay, realistically, how much do you really need to pay your rent or your mortgage, water, food, light, gas, basic necessities just to survive, and that you'll be okay, that you'll be covered. Well, in this particular example, if you help 25 families at $100 a month, that's $2,500 per month. Most people on this call at $2,500 a month can retire from their day job. You can literally, you can probably fire your boss in most cases. And that's, once again, basic, bare minimum living expenses. If you do get even more excited and work your tail off, as you should, 100 families should not be a big deal for most people. And at $100 a month, that's $10,000 per month. And some of you on this call may look at that number and say, that is way too much money. I don't think I'll ever make that in my life. But the reality is you can. You absolutely can. And you can actually make it here with us here at Powerhouse. And that's very, very, very conservative. So we're keeping those numbers so that people their heads don't explode. But anyway, if you make anywhere between $2,500 to $10,000 a month, for most of you on this call, that could possibly be the definition of financially free. Financial freedom is not having $1 million, being a millionaire. Financial freedom just means whatever your expenses are, be that $22,000 a month, be that $7,000 a month. If you have enough money coming in, as we call passively or residually, without you having to go out and physically do any type of labor, you're financially free. And that's what our goal is. And this is just one of the examples of how we can do it. And we can help you do that as well. So how's it work? Here we go. Now, on the term life insurance policy, this is just an average national number. This is pretty much across the board. It's an average policy is $83.33 per month per person is roughly what it comes out to on average. If you multiply that times Mr. and Mrs. or mom and dad, it's $2,000 a month in annual premium. Most people come in at the 60% commission level just to start off with. So if you're an agent and at 60% commission and you work with a family for about an hour, 45 minutes to an hour, you will make 60% of $2,000 is $1,200 per couple. So that's why if you help one family a week, you know, that could easily be $4,000 to $5,000 a month. And that's where we get those numbers from. And those are very, very realistic. These are very conservative as well. Now, if you like the broker, as we showed the real estate model, if you like the agency model, and you come in as an agency owner, which it just requires you to hire a few people like what we're trying to do here as well. And we'll do the hiring for you. We'll help you at least. You will increase your commission or create your own pay raise. Get this. You actually can give yourself a raise just based on your energy and your amount of focus and how hard you want to work. So where else can you get a 20% raise in the workplace? So once again, we're working on getting you over to the B quadrant from the S quadrant. So 80% commission on $2,000, same family, Mr. and Mrs., just a couple, is $1,600 in 1 hour. Same time frame. You just now that you decided to bring in a few more people, become an agency owner, your commission goes up. And once again, as I said, the maximum for most people that we have available is up to 140% commission. So you do the math. So if you come in as an agency owner and you start building that team, just like I mentioned with the real estate model as a broker, you could have, in this particular example, a 20% override. Once again, we love override. That's where you'll become financially free. So in this case, 20% override gives you $400 per sale times however many agents you can find. And we call that mailbox money. Somebody else went out to wherever, sat down with the family, wrote up the policy, submitted all the stuff, answered all the questions, did all the follow-up. They made their money, but then you made, in this particular example, $400, got deposited into your bank account, probably while you were sleeping. And that's the best part. When you open up either your bank statement or you open up your app to your bank and you see X amount deposited and you didn't know where it came from, that's a beautiful thing. And that's where we want you all to be as soon as possible. So you get 10 of those people, 10 agents, you show them the work, you show them how it's done, multiply that by 400. Now, depending on whether they're doing that per week or per month is on you. Once again, there's really no limit, but in this case, you can make up to $4,000 per week if they're really working hard, or at least $4,000 a month. Residual override money. Money comes in while you sleep. You didn't have to do much other than your initial time and training, and we do all the training and support as well initially to get you going. So option A is you quote it, you sell it, you make all the commission. Option B, either you refer it or one of your agents does the presentation and does the enrollment application, and you split the deal. This is more on a higher agency level. But one requirement, and it's probably the only main requirement we have, you must have a health and life insurance license in the state that you reside in or want to do business in. Unfortunately, in order for you to get a commission, just like in real estate or any other entity that requires a license, you need to have that license as well. So we don't look good in orange. And luckily, this particular license is very, very easy to get. And we also support you with that as well. So here it is, decision time. Based on what you've seen thus far, what do you say? Yes, I'm all in. Let's get started. This is what I've been wanting for. I'm definitely want to bet on myself to be able to have this opportunity. Hey, you know what? Sounds interesting, but I want a little bit more information, and that's okay. And the third option here is, you know what? No thanks. Not really interested in the opportunity at this time, but I would like to have someone sit down with me and help get my financial house in order. That's it in a nutshell.